Welcome back to another video. Today we're talking about how to get a mortgage. So if you've never gotten a mortgage, this will give you a little more information, education about how to do it, what the process kind of looks like. And then if you're new here to the channel, I talk about things like business, personal finance, investing, and success. So if any of those topics sound interesting to you, go ahead and hit the subscribe button, ring the bell if you want notifications of when I do a new video, and then leave any comments that you would have on any of those topics. And I'd be happy to do a video explaining my knowledge and experience with those subjects. So back to mortgages. So basically the mortgage market changes quite frequently depending on the year and actually government laws. They change the regulations so that you can buy houses with no money down. You can buy houses with zero money down. You can buy houses with 5% money down, 10% money down. So they're always kind of changing. So be aware of that as you go in and look at mortgages. And then there's different types of lenders. So different lenders meaning there's VA lenders. So if you're a part of that, you can contact them and they usually can get you the best deal. And some lenders only do VA loans. Then there's conventional loans, which is just a normal home loan for most people. So you can contact, conventional mortgage people. That's like your Wells Fargo, JP Morgans, all the standard home loan companies that you can just find on the internet. Then you also have FHA loans, which is the Federal Housing Administration. And then that's government sponsored loans. So a lot of times they'll do some incentives for first time home buyers, and you can get really good rates through them as well. So depending on the current laws and the governmental power who's making all the changes to influence, more lending in the mortgage market, one of those loans may be better than the other at any given time, and then they may require a different down payment, like FHA sponsored loans through the Federal Housing Administration. They may be at 3% down, or 0% down, or 5% down, or 20% down, and same with the VA loans, and same with the conventional loans. So definitely good to reach out to several of those different lenders to see what the qualifications are at this time, or whatever time that you're looking at getting your mortgage. Also, you can the credit scores, they vary depending on the time too. If the economy is really good, a lot of times the lenders are going to be able to accept a lot lower credit scores. So don't ever think that your credit score is too low to qualify for getting a mortgage, especially right after a recession. Go ahead and call around and get some ideas of what kind of loans they're able to process as far as lower credit scores in the current environment. So it's always good to just call them and find out what they're able to do at any point in time. And then after a recession, or I guess a boom time where the economy has really been growing and everything, they may start to raise their credit standards a little bit, where you have to have the higher credit scores to get a loan, like in the 700s, higher 700s, 800s. And then you will definitely get a different interest rate depending on those different borrowers too, or different lenders. So you can ask them kind of what their interest rates look like, and then you can do research on the internet for the time that you're looking to get your mortgage, of what the interest rates might be. But interest rates are always changing depending on what the Federal Reserve is doing as well. So they go up and down all the time. And then through you can always refinance at some point when you hear the interest rates are going down, if you get a loan when they're higher. So thanks for watching the video, and go ahead and subscribe, ring the bell button, leave me any comments, and we'll see you in the next video.